Want to go to the employer contribution tax credit now? Kind of talk a little bit about that one.
Yep, absolutely. And this one really gets me excited because they've never done this before. Doesn't take much to get me excited, I guess.
It's funny the things
But
in the dental world or the orthodontic arena, we get this passion about teeth and all that. It's fun to see someone in their profession get excited about that side of it as well. I'm sure the teeth side to you is like, really, and a lot of times to the dental world, the accountant side's like, really, but it's great. I mean, that's why we both do what we do. So
yep, absolutely. So what this credit says is some of the money that you put into your employee's retirement plan. Remember earlier I said set up a safe harbor 401k so that you'll be putting money into the plan for the employee.
Yep.
What if I tell you now that this credit is going to subsidize you for putting money into your employee's plan?
Wow.
That's a game changer. That's really a big deal. That's never been done before. So powerful tool. I mean, I'm sure that's something that most dentists that are no longer in practice, they could only dream that the government is actually funding the contribution you're making towards your employees.
It's huge.
Big deal.
Yeah.
Now, the good news is they're doing it, but they're not going to do an unlimited amount. But this is real money we're talking about. So under the Secures Act, again, any defined contribution plans, and by the way, it doesn't apply to defined benefit plans like the cash balance plan. This is only defined contribution plans. Because in order to get the employer contribution tax credit, you have to be able to give the employees an option to put money into the plan for themselves as well. So the eligibility requirements for this are identical to the startup credit. So if you qualify for the startup credit, you're also going to qualify for this. They kept that simple. It's the same rules to qualify. So here's where it gets really great. The credit is a maximum of $1,000 per eligible employee for a 5-year period.
Wow.
That is big. So you may have employees that you're contributing, say, 3%.
Yeah, I was just
you're
gonna
giving
say,
them, whether they contribute or not.
You're
really not contributing that money now. The government's giving you money back up to the first $1,000. It's a no-brainer. You have to. If you don't have a plan like this in place right now, you really want to do it. Not only for your tax savings, not only to get you to point X much quicker, but the government for a 5-year period is going to subsidize up to $1,000 per employee.
And just to put in perspective, quick math here. So if someone's making 40 grand, the 1%'s 400, 3%'s 1,200. They're almost covering an entire 3% for a $40,000 employee, right?
Absolutely. So some employers shy away from setting up these plans because they don't want to pay all the administrative costs. Well, guess what? I already told you they don't exist anymore because they're getting subsidized through the Medicare tax elimination and avoidance, and also the credits I already talked to you about. But in addition to that, employers sometimes say, I wouldn't mind paying that administrative fees, but I don't want to put away $10,000 and give that to my employees. Well, guess what? They don't have to do it now, right? Because the government is going to subsidize the money you're putting into it. And I see you smiling. I see your wheels going right now. You're thinking about how you're going to take advantage of this, right?
You know me, yeah.
So this is very powerful. Now, one of the catches is that the credit does not apply to employees who are earning $100,000 or more per year. And you ask, why did they do that? Well, who they're really looking out for, the government's looking out for the little guy. Your front desk receptionist, maybe a hygienist who's working part-time and not making, $100,000 a year. So they're basically trying to make sure that those people end up getting money saved for their retirement. And it's sad. It's a sad reality, but in this country, by the time it's time for people to retire, a very small fraction of people are in a position to retire because they just don't do it, especially those lower income individuals. They're living paycheck by paycheck, and as much as they'd love to put some money away into a retirement plan, they just can't, because that could mean they're not paying the rent, they're not turning the lights on, to light the house. So this is a great rule. because the government is again stepping in and motivating you and I as employers to do this, and also paying part of the bill as well.
Yeah.
So it's one of those tax laws I love, not just because what it does for the employer, but what it's also doing for employees.